Welcome to this video about trading bots and their role in the financial markets. Trading bots, also known as automated trading systems, have become increasingly popular in recent years as technology has advanced and more traders seek to automate their trading strategies. In this video, we will explore what trading bots are, how they work, and the advantages and disadvantages of using them in the financial markets. Trading bots are computer programs that analyze market data and execute trades for traders. They use complex algorithms to provide faster, more accurate, and efficient trade executions while minimizing the risk of human error or emotional bias. Trading bots are used by individuals and institutions to take advantage of real-time market opportunities in today's competitive financial markets. Trading bots are computer programs that automatically execute trades in financial markets. They use algorithms to analyze real-time market data and make trading decisions based on predefined rules and parameters. These bots connect to an online trading platform and a broker's API to execute trades. The algorithms used aim to identify profitable trading opportunities by analyzing patterns and trends in market data, using technical and fundamental analysis. The bot can manage risk by setting stop losses or take profit levels and can take advantage of specific market conditions using advanced order types. Trading bots provide a faster and more efficient way of executing trades, while minimizing human error or emotional bias, helping traders stay on top of market trends and take advantage of opportunities in real time. There are many popular trading bots available in the market, and their popularity can vary depending on the specific trading strategy and market being traded. Here are a few examples of popular trading bots. The 1000 Pip Climber system is a forex trading system that generates buy and sell signals based on market trends using technical indicators. Traders can receive signals via email or SMS and execute trades manually or using automated trading software. It's user-friendly and customizable to the trader's risk tolerance and trading style. Automated Forex Tools is a suite of automated trading systems and tools for the forex market that includes expert advisors, indicators, and scripts. These tools can generate trading signals and automatically execute trades on the MetaTrader 4 and MetaTrader 5 platforms, allowing traders to automate their trading strategies. The tools are customizable to meet the trader's individual needs and risk management preferences. EA Builder is a user-friendly software that helps traders create automated trading systems or EAs without any coding knowledge. The drag and drop interface lets users select technical indicators and define entry/exit conditions, and stop-loss/take profit levels. The software generates code for the trader to use in the MetaTrader platform, allowing for customizable EAs to match specific trading styles and risk management needs. Wall Street Forex Robot 3.0 is an automated forex trading system that generates buy and sell signals using technical indicators and price action analysis. The system adapts to changing market conditions and can be customized to fit traders' risk management preferences. It works with MetaTrader 4 and supports multiple currency pairs. Trading bots use algorithms to analyze market data from various sources, such as stock prices, trading volumes, news articles, and financial statements. These algorithms rely on technical and fundamental analysis to identify patterns and trends that indicate a profitable trading opportunity. Technical analysis involves using historical market data and indicators, such as moving averages and RSI, while fundamental analysis involves analyzing financial and economic conditions. Trading bots can use NLP and machine learning to analyze news articles and other text-based data sources. By automating the analysis process, trading bots can help traders stay on top of market trends and take advantage of profitable opportunities in real time without the need for human intervention. Trading bots analyze market data and generate signals to buy or sell assets using algorithms and predefined rules. The process involves collecting data from various sources, analyzing it using techniques such as technical analysis, fundamental analysis, and machine learning, generating signals based on predefined rules and parameters, and executing trades using predefined rules for order placement. Trading bots may use machine learning, natural language processing, and sentiment analysis to identify patterns and trends in market data. By automating the process of data analysis and trade execution, trading bots can help traders stay on top of market trends and take advantage of profitable opportunities in real time. Trading bots execute various types of orders to manage risk and maximize profits. Market orders buy or sell assets at the current market price, while limit orders execute at a specific price or better. Stop-loss orders sell an asset if its price falls below a specified level, while take-profit orders sell when it reaches a specific price or better. Traders can configure bots to manage risk and minimize losses by setting up predefined rules and parameters based on technical indicators or fundamental analysis. Risk management techniques, such as position sizing and portfolio diversification, can also help traders minimize losses and maximize profits. Factors such as data quality, algorithm complexity, and market conditions can affect the accuracy of trading bot signals. High-quality data is essential for generating accurate signals, and more complex algorithms may identify more complex patterns but could be prone to errors. Market conditions such as sudden fluctuations and news events can also impact signal accuracy. Trading bots have been used successfully in bull, bear, and range-bound markets by using momentum, trend reversal, and support and resistance indicators. Traders should consider these factors when using trading bots to make trading decisions. In this video, we discussed trading bots and their role in the financial markets. We explained how trading bots work, how they use algorithms to analyze market data, and how they generate signals to indicate when to buy or sell a particular asset. We also discussed the different types of orders that trading bots can execute and how they can be configured to manage risk and minimize losses. Additionally, we highlighted the factors that can affect the accuracy of trading bot signals, such as data quality, algorithm complexity, and market conditions. Finally, we provided examples of how trading bots have been used to generate profitable trades in different market conditions. If you're interested in learning more about trading bots, there are several resources available online, such as tutorials, blogs, and forums. Some popular trading bot platforms include MetaTrader, TradeStation, and NinjaTrader. Keep in mind that trading bots are not a substitute for careful analysis and risk management, and traders should always do their own research and due diligence before making any trading decisions. Don't forget to leave your thoughts and opinions on trading bots and their role in the financial markets in the comments section below. We would love to hear from you. Also, if you found this video informative, please give it a thumbs up and share it with your friends and family who may be interested in the topic.